Hi, this is David with the Enzo Trading System. Today I would like to talk about something different. I would like to talk about an algorithm that I recently implemented as an answer to the current market state of Bitcoin and crypto in general. Since the summer, Bitcoin has been bouncing around 19,000, but doesn't seem to want to move. So I finally decided to develop an algorithm that will work on ranges. And more specifically, I started looking at just a 19,000 value to make, let's say, early determination whether how difficult it may be, how useful it can be to make a profit from this knowledge. So the first version of the algorithm is one that really will naively buy when the price goes below 19,000, and it will sell again when it goes above 19,100. So this is, of course, based on observed behavior. Why is it round numbers? Because market is basically driven by people or by algorithms that are written by people. So these are obvious values that seem to do the trick. So this very basic algorithm, it's one that we can quickly test here. I'm running a back test from simulating with market data, Bitcoin market data from July the 1st to the current date, which would be October 27th. And here we can see quite a bit of activity starting from September. So of course, July, I guess, didn't really touch quite 19,000, and then in September started doing so. And we have all these nice trades that will buy as soon as it goes below 19,000, and then it will sell as soon as it goes above 19,100. And the profit is excellent, plus 24% for basically September and October. Maximum drawdown close to 5%. Excellent return over maximum drawdown, sharp ratio, and also win rate very high. One thing to notice is even with this very simple algorithm, I put in the stop loss system. So we do have a couple of losses, because what happens, even in this case, there are cases in which one will buy below 19,000, but then the market decides to go much lower, and we set the risk at 4%. So by the time that the price went lower than 4%, the stop loss kicked in, and we actually net a loss instead of a profit. But you know, it's a couple of losses over 42 positions. That's excellent. You know, I wish we could do that every day. Of course, once we put, I mean, first of all, this is not a very dynamic algorithm, and I will go more in detail now how the final algorithm has been developed. And the final algorithm is actually applicable to any price range, any round number, not just in the tens of thousands, also in the thousands, and it will work with pretty much any market that moves sideways. So yeah, okay, this was the first implementation. It's exciting. So first step to make a reliable algorithm is two things. We have to determine what's the, kind of this base price point, which may be intuitive for a human, but you know, once you have to put it into a formula, it becomes a bit more complicated. And then we also have to determine that the market is moving sideways. So to determine that the market is moving sideways or not, that's very simple. We use a simple median average, which is a simple moving average, which is basically a smoothing of the price. And then from there, we can see if the distance between the current price and the average is too far. It could be, I don't know, 2, 3, 4%. It's a value to be determined. But it's fairly simple to our code. If it is too wide, then the market is moving with a slope. And if it's moving with a slope, it's obviously not moving in a range. And if the average is close enough to the current price, like in this case, then it's basically much more likely to move in a range. Very simple. Another thing is, of course, we do have we need to develop a concept of I guess of a floor. To do that, there is another very simple formula that we can apply, which is the minimum value given a certain range. So in this case, I calculate the minimum value that the price are reached in the last, let's say, 28 days, last 4 weeks. So at a certain date, we touch certain value, and this is protracted into the future, so to speak, or rather, at the current date, we look 28 days before, and we see what's the minimum, and that's our minimum. Of course, the minimum is influenced by spikes, so we can see, you know, we're aiming at the 19,000. We know that our range is 19,000, but there are cases in which the price really went as low as 18,400. This is kind of an anomaly, and we would do want to filter out the anomaly. One way to filter out spikes would be to use a median filter. That's very common in image processing. Basically, you take a bunch of observed values, and then you sort them, and then you pick the one that is in the middle. That's actually not the way I went with for this. Didn't need to. Instead, what I decided to do, to kind of get something that is close enough to the level, it's the middle between the minimum and the average. And so if we get the middle, it will be something like this, and it seems to be close enough to a range, to the middle of the range that we're interested in. So this was basically an observation. I implemented this. Again, this is this plus this divided by 2, and we get kind of something that is close enough. So next step is really we want to find these nice round numbers. So here it's a bit more numerical explanation. I'm not sure that I can explain really well, but I will try. Let's see, what do I have? Source code. Here's kind of a basic implementation. So basically what we want to do, we want to have, let's say, our 19,200. First, we want to determine what's the scale of it. So in this case, I want to know basically how many, what is the, if we raise to the power of 10, what is that value? And we do that by calculating the logarithm base 10. So if I do, let's say I have my price 19,300, and then we do the log base 10, we get this 4.28. So it is a fractional number because of course it's not 10,000. 10,000 will give us even 4, and we're actually interested in the even number because we want to round things up. So to get the even number, we do the floor, and then we get a nice 4. So in this case, actually, I want not the 10,000, I want the 1,000. So it's simple enough. I subtract 1, and I get 3 instead of 4. So now that and actually it's better to look at this code because it actually names these values. So here I want, basically I kind of want to separate between 19,000 whatever. I want to have an even 19,000, and I want to know how many digits I'm working with as kind of a high resolution for which I will need to base my offset to which to sell. Meaning, in this case, when I do the floor of the log of the current price minus 1, this will give me 3, and it means that I have these 3 digits on which to build my offset. So 19,000, 19,100. 100 is 3 digits. So the first formula gives me those extra digits, and the second one I just raised to power, and so 3 means 1000. So now I have my nice 1000. So now I want to get to the level, and I will use this scale to get to the level, and I will use again the floor, which basically turns a fractional number into the closest low integer. And that would be, we can see interactively here. I have my, let's say we call it extra digits. I call these extra digits. And this is price. And again, we have 3. Now we need this extra scale, which is basically ten raised to the extra digits, and that would be the 1000. Now I want to calculate the level. Oops. And what I said I will do level equal the floor of the price divided this extra scale. Actually, this is just the first step, and now I have the 19, but actually I want the 19,000. We multiply again by extra scale, and now we have a nice 19,000, and we started from 19,300. So another thing we need is this offset, right? We say that for 19,000 or 20,000 or 15,000, we want to work with the hundreds. Why is that? Just because people do that. They see 10,000 and I think 10,100. There's more to say about that, but I will refrain now. But so let's say I want the offset. The offset is very simple. Let's say my offset is the extra scale. If there is a scale divided by 10. So it's extra scale is 1000 divided by 10 is 100. So now I have, when I have my input price, 19,300, I get 1, the level, which is 19,000, and 2, the offset, which is 100. Why did I say about, there's more to say about that? Because 100, the difference between 10,000 and 1,100 and 20,000 and 20,100, it is still a difference of 100, but the profit is done as a relationship. So we have to divide 10,100 by 10,000, and then we get how much profit we do if we indeed we buy 10,000 and we sell at 10,100. Similar with 20,000, but the actual profit is quite different. So people will continue to think in terms of 100s, but the amount that you earn from going to 20,000 to 20,100 and 10,000, 10,100 is actually half of it. And we can see, I mean, I won't say, but there's something about that. And it's actually relevant to how much profit one can really make, even thinking in these terms. If one works with ranges, has to make sure that, sometimes it may not be worth to work with ranges with the offset that is so small. So, I mean, yeah, there's more things to talk about because the floor is not quite enough. You may want to snap it to, if you are 19,600 or 500, there's a little bit of a behavior to change. So I finally ended up with a formula that is more like this. Basically current price, and then we add the extra scale divided by 4. It's a bit of a bias that makes sense, but I won't explain now, but I want to show just for clarity, for completeness. So finally, we do have, I guess, the algorithm, and yeah, let's memorize with it. Oops, that's the naive version. Now we'll save this for safekeeping. Now we'll close this and go back to the source code, and I will comment out the naive version. And now there's a more complicated version. Actually, this one doesn't need to be here. Just confusion. Confusion. This is the version we ended up with. This is some extra logic. This one is the check for the median average to make sure that the difference between the median, not the median average, the simple moving average. So make sure that the difference between the simple moving average and the current price is not too much. Otherwise, it means you're in a slope. This is another custom indicator that we often use to even things out. And this is the function that calculates the level and the offset. And it's up here. It's a bit more complicated. And there is also the additional logic that I mentioned. If perhaps the relationship between the base level and the base plus offset is too small, that I mentioned, depending on how big is the number. If it is too small, then perhaps we don't do 100, we do 150 or something. So we have this. I go here and I finally compile it. Hopefully no errors. So now we're going to test the non-naive version, the complex version, the one that uses the minimum, the SMA, and it calculates the price range dynamically. We can go here and now test again for the same price range for Bitcoin. And actually we can do the same at this point also for Ethereum. So now something interesting. If we compare, this was the previous version, the very naive version, and this is the new version. Performance is a bit worse, but that's kind of to be expected. This one is a really dynamic version. It will work in many other cases. As a matter of fact, we can see that it actually takes a range in August as well. If we go and see, out of curiosity, this was in August, and there was actually a level at 20,000, and it could capture that as well. See, it would buy 19,792 and sell 20,117, so on and so forth. So we capture the level in August, we captured the level in September and October. Of course, once we put this online, the Bitcoin started to going up, and maybe we'll never see 19,000 again, but hopefully we'll get another sideways movement in the near term, so that we can actually see live trades with this algorithm. So here with Ethereum, kind of a similar situation. We actually didn't have anything in August. It wasn't as flat. There wasn't this flat state by the end of August as we did with Bitcoin. This is part of the, it's not part of the test, part of the warm-up, so we don't consider it. And basically it was pretty much end of September and beginning of October. We did get decent profit, almost 13%, and maximum drawdown very small, 3.74. And again, we can see the ranges here are operating at about 1300. So totally different range, same algorithm, and it works. It will work with any range. We rate also quite good. So yeah, hopefully we'll see this live. Perhaps there is more detail I could say about the algorithm, but I mean, it will probably start to take hours. I think it's very valid, and And I should mention also that recently we previously, up to about a month ago, we only had the selected number of algorithms. As a matter of fact, in August we only had one short algorithm that was much cause for trouble. But now we have a large amount of algorithms, and we have a new system that allows for up to 3 algorithms long and up to 3 short to cooperate at the same time. So there's going to be a lot more trades, a lot more dynamic behavior. And in fact, if we see live now the signal maker, if I open Bitcoin, we can see a lot of trades, and we can see that the active algorithms, it's 1, 2, 3, 4, 5. So these are short algorithms. We can have up to 3, but if they're not performing as well, there will be only 1. And we do have the Ranger. We can see here the Ranger algorithm is active and well, and of course it hasn't done anything in the recent days because we're not in range anymore, but it would have performed well before. And of course, again, because it's a mix of algorithms, the system has continuously have to guess what's the best mix. With the benefit of hindsight, it would have been nice to just have just a Ranger for the past 2 months, but you know, we do not have the benefit of a hindsight. So even in this more realistic backtest, we basically have a machine learning system that will, at any given time, use a different mix of algorithm, including a Ranger, which is kind of optimal has been, but including also algorithms that didn't do as good. But that's pretty much the name of the game. You kind of have a system that is dynamic, and it will try to pick the best algorithm at any given time. And the best that you can do is kind of have the scheduling and selection of algorithm as good as possible, and the algorithms themselves, they should be as good as possible. That will be it for me. I think it's fairly long, hopefully useful. If you have any comments, questions, I'm always open. And yeah, I guess we're also available if you want to implement your own algorithm and you're interested in working with us, then you know, we can find a way for us to implement the stuff into our system. And there is benefit into writing algorithms in our system in C++ rather than putting into TradingView. I won't mention that today, but perhaps I will make another video to talk about all the loop forward and validation and you know, the whole machine learning side of things. That's enough from me, and until next time, have fun. Thank you.